Mortgage lenders are finally throwing borrowers a bone, with Santander and Barclays rolling out sub 4% deals, the first we have seen since November. My name is Jack Reeves and welcome to this week's episode of Tax Tidbits, where the Bank of England's base rate cut to 4.5% last week has lenders feeling generous, or at least competitive. However, before you pop the champagne, these low rates do come with strings attached. You may find you need to put down a hefty 40% deposit, and there may be some sneaky fees to pay too. While the average 2-year fixed rate deal is still a not so fun 5.48%, experts think more cuts are coming, which could see the average reduced soon. Chancellor Rachel Reeves' attempt to intervene in a major car loan compensation case was blocked by the Supreme Court this week. The case, set to hear an appeal in April, could force lenders to cough up as much as £30 billion in compensation after it was ruled they secretly paid dealers commissions without telling customers. The FCA banned this secretive practice in 2021, but now they are debating whether past customers should receive compensation. The Treasury is worried about the impact on the car finance sector, but has said it respects the court's decision and will monitor the case. If this goes through, it could be the biggest compensation payout since the PPI scandal, so maybe check your old car loan paperwork. UK inflation jumped to 3% in January, up from 2.5% in December, driven by pricier food staples like meat, bread and eggs, as well as a hefty 13% rise in private school fees due to the new VAT charge. Airfares also played a role after they refused to drop as much as usual after the holiday season. While inflation is far below the 11% peak we saw a few years ago, it's still above the Bank of England's 2% target, causing critics to point fingers at the Chancellor's policies. With energy bills set to climb in April alongside council tax hikes, water bills and now possibly inflation, experts are already calling it awful April. Thames Water just pulled off a last-minute escape from going under thanks to a £3 billion rescue loan approved by the High Court. With a mounting of debt to the tune of £19 billion, sewage scandals and furious creditors, the UK's largest water and waste company was set to run out of cash by the end of March and would have been forced into temporary nationalisation to keep services running. This cash boost buys the company some time, at least until the next crisis. Not everyone is happy about this though, as some lenders think the loan's interest rate is too high and they plan to appeal, while critics call it a sticking plaster that just delays the inevitable. Welsh farm unions are fuming after their meeting with the UK government over inheritance tax changes. They had hoped to negotiate their way around the new 20% tax on farm assets valued over £1 million, but found Treasury officials as flexible as a fence post. Farmers warn that the tax could devastate family-run farms, forcing families off their land and even hurting Welsh-speaking communities. Politicians are weighing in, with critics calling it an attack on the countryside, while the government insists it's a fair and balanced way to fund public services. And that brings us to the end of this week's episode. If you enjoyed this video, don't forget to like, comment and subscribe for more tax tidbits. See you next week.